the stock exchange this morning. It's very exciting. Priced at $22 a share. It will probably open much higher than that. We have CEO Brett Schulman joining us now. Brett, first, congratulations on all your success.
Thanks, Jim. Thanks, David. Thanks for having us.
Now, I think that your story is one that I want people to know. It's an actual authentic story from three people who are great cooks, and you join. And I want you to just tell America what has happened with your story. It is that good.
Yeah, our brand was founded by three childhood friends, sons of Greek immigrants, Ted, Ike, and Dimitri, Chef Dimitri, really to bring their modern American spin on their family's heritage and culinary. And we do that through our mission to bring heart, health, and humanity to food. And I was introduced to the guys back when they had 2 full-service restaurants and sold their dips and spreads in a couple local Whole Foods markets. And we hit it off. They said, come on board, be our 4th partner. And we talked about we need to bring this great food, this unique cuisine where taste and health unite without compromise to a larger audience. So we worked and we co-founded our fast casual restaurant, Cava, as you know it today, and operate in over 22 states and have over 263 restaurants across the country.
Okay, so let me ask, you've got a great average unit volume, north of 2.5 million, which is very good. But I think a natural, more critical person might say, you're not making money yet. So why not?
Yeah, so when you think about it, we've got this amazing white space opportunity in Mediterranean. We have a clear dominant leadership position defining the category, and we've created a powerful unit economic engine. Our restaurant level profit margins are strong. Our increase in restaurant level dollars, 50 million in the first quarter alone, over 91 million all of last year. Restaurant level profit is the oxygen, the lifeblood of our business. And then we've invested in significant, robust infrastructure over the years. So as we grow and move forward, we'll be able to leverage that infrastructure, and we get a really attractive cash-on-cash returns on all these investments in the new restaurants we're building, and you're seeing that momentum build in the business.
I mean, because that ends up being the concern, at least of some, which say, hey, you've got very impressive revenue growth, but they do wonder about ultimate profitability. Yeah. You seem to be indicating that if you were to stop investing right now on the restaurant level, you're already profitable. Mm-hmm. But what do you tell people when they look out in terms of how much you're spending, what you're going to use, and the resources you're garnering today from the IPO, and when that day comes that you actually will be, overall as a company, profitable?
Well, we made significant investments in the Zoe's Kitchen acquisition. We converted that and transformed that acquisition, and you're seeing the momentum come out of that, where our net income from last year in Q1 alone went from a $20 million loss to a $2 million loss. So again, you're seeing the inflection point in the business, and all of that robust infrastructure we've invested in, the new restaurant growth, starting to take hold and drive real tailwinds to the business.
But you're still talking about years before you're profitable.
No. If you simply look at the restaurant level profitability, you look at our cost structure, you can have line of sight to it.
What's line of sight? Give me some. Give me. I mean, am I talking a year, 2 years, 5 years?
Yep, the restaurant level.
Wait, let him answer the question.
Okay, I'm sorry.
You can see line of sight. You can read the S1. You can read our numbers. Yeah. So we're incredibly excited about it. We've got a great path forward. We see this working and proven portability, no matter whether we're in the suburbs or the cities, whether we're in Bryant Park here in Manhattan, or Back Bay in Boston, or Fayetteville, North Carolina, or Fayetteville, Arkansas. We're seeing consistent results. And I think that's the other thing that's exciting. When you look at our average unit volumes, it's not just one region of the country that's successful, it's all regions we operate in. And that gives us the confidence that, that is coming.
The line of sight is
the line of sight.
By the way,
yes.
David, they do break down the regions, so this is a very transparent company. And on the profit margin per store, the actual restaurant level profit margin, which is a very good indicator, they are, the last one was 25.4%. Now, Chipotle is 23.9%. So the comparisons, a lot of people are comparing you to Sweet Green, which is a fizzler, and some are comparing you to Chipotle, which is long-term. I want to ask you, where is America in terms of Greek food versus where it was, say, 5-10 years ago? Yeah,
that's the incredible thing. When you look at the demographic shifts in our country and the trends, 48% of Gen Z identify with an ethnic minority group. That's up from 38% of millennials. Gen Alpha will be the first generation across that 50% paradigm. And what we know is, as the country gets more diverse, people are seeking bolder, more interesting flavors, seeking the new cultural cuisine beyond the mature cultural cuisines of Mexican, Asian, and Italian. And that's where Mediterranean comes in. And then you match it with the shifting health perceptions, where people want to eat better, but they don't want to have to make compromises doing it. And that's where our unique cuisine, where taste and health unite, come in. And then it appeals to so many people, whether you're a vegan, vegetarian, you want to eliminate lactose or gluten, or you want to eliminate garlic, Jim. I heard.
Yeah, I know.
That's
going to be impossible.
Our culinary team has made a garlic-free Kramer Bowl for you today.
The Kramer Bowl?
The Kramer Bowl.
The Kramer Bowl is...
And that's
you already had it. I mean, you really didn't need to do that.
That's unbelievable.
He's already obviously.
I got to get him in.
Now you're giving him his own bowl.
I can't even get into your restaurant down here. The line is so long. You're telling me I don't have to wait in line and I get a Kramer Bowl?
We got to get you in line. So the point is, like,
it is exciting. The place is very exciting.
We've got 38 items on the line that you can make over 17.4 billion combinations. And what that leads to is an incredibly diverse customer base, which leads to that incredibly diverse portability, which generates that powerful economic engine, which will address what you talked about.
And what is the primary use of the proceeds from this IPO?
To build new restaurants and bring this to the 26 states in the continental U.S. we don't operate in today, and grow in the markets that we do operate in.
Promise me you will not do willy-nilly growth. Promise me you will not cave to Wall Street and put up 200 stores next year.
We've put a very reasonable plan out for a growth rate because we agree with you. We think the same thing. We want to make sure that the growth is measured and we maintain this excellent quality we've been able to deliver the last 12 years.
Now, when your discussions with the bank, JP Morgan, did you discuss as the price moved up that there really is a possibility you could do this at $30, $40? Obviously, big institutions went in and individuals. How do you think you came to that $22 number?
It's a reflection of how we've thought throughout our journey, how our investor partners and our board, as we were a private company, think, and that's long term. We want to build this for the next 10 years, not the next 10 months. This isn't a destination. It's not a moment in time we're trying to maximize. We're trying to build this for the long term.
In the near term, dealing with things such as food costs and inflation, not to mention obviously wage costs. How have you navigated that, and have any of those sort of started to get better?
Yeah, so I think that goes back to my point about the infrastructure we've invested in over the years that we're beginning to see the leverage from. We have a direct source supply chain with scalable producers where we control a lot of our inbound freight and logistics. So as we grow in markets, we move from LTL pallet pricing to half truckload to truckload, getting freight savings as well as economies of scale with our providers. And we're vertically integrated. We have manufacturing facilities where we produce all of our dips and spreads. So that allows us very efficient, cost-effective production of our high-quality ingredients that we're not having to produce and have the complexity within the four walls of our restaurant. And what that allowed us to do is take less than 5% in restaurant pricing last year while expanding restaurant level margins and really driving that value proposition for our guests.
A number of people, I mean, Jim mentioned Sweet Green, which is right down the street from Cava here. And people can remember when that company went public as well, telling a similarly strong story in terms of sourcing a lot of things. It hasn't gone that well, at least as a stock. How do you differentiate yourself from that?
Yeah, I'd say look at our restaurant level margins and how strong and robust they are, and look at our proven portability. We're 82% suburban in our portfolio. We've been over 80% throughout our history. As I mentioned, we're in small markets like Lynchburg, Virginia, and Lancaster, Pennsylvania, and we're in Westwood in Los Angeles. So the incredible diversity that we see this resonate, and as Jim pointed out in the S1, the consistency of that performance in all regions of the country, I think really shows the difference with Cava.
And hence why I've been saying, I know, David, I've been going on and on about it, why this deal is so important. It's going to be very exciting, and I know that's a word that is loaded because we want people to do all the homework, but if you do the homework and the transparency of this company, this is the way that Chipotle started. And Chipotle is one of the greatest restaurant chains on earth.
That's high praise. It's a great company.
I
appreciate being included in that category.
You just have too many good things going for you, including the make line. You do a very good job.
Thanks for good luck today.
Thank you so much.
The debut is getting close, 29 to 31. Looks to be at least the latest indications.
And a Kramer Bowl to boot, without the garlic that makes you upset.
David, we'll have to figure out your David Faber Bowl.
Yeah, I know.
David doesn't like anything except thin gruel.
It'll be very cranky, whatever that bowl is.
We don't want you to be angry.
You're terrific.
What do you got tonight on the show?
Okay, I have Adobe, and Adobe is probably the best use case for AI and how much productivity there is and how much money can be made. Shantanu Ryan, I cannot wait. He's terrific.
Okay. Jim, thank you.
And thank you.
Shantanu, again, the guest tonight on Mad. We'll be back right after this.